Mr. Brútton, the Irish government recently announced its 6th austerity budget since the onset of the crisis. How do you assess Ireland's position right now? Is there light at the end of the tunnel?
I think there is. Ireland has very slight economic growth this year, had economic growth last year. The Irish competitiveness situation has improved quite substantially. Our exports remain very buoyant, very strong, not just from foreign firms in Ireland, but also increasingly from Irish-owned firms as well, and we have a balance of payments surplus. So all of these factors are pointing in a good direction. We do still have a very large debt, not just a large government debt like Greece, but also very large corporate debt and very large personal household debt, again a bit unlike Greece. And those problems are going to take quite a long time to unwind, but at least we have the dynamic with which to deal with the problems over time.
Ireland has also more or less achieved the targets that were set under the bailout program that was agreed. On the other hand, Greece has consistently failed to do so. Why do you think Ireland has been able to achieve the targets and Greece hasn't?
Well, I think it's only fair to say that the Irish targets were set quite modestly at the beginning. The Irish government was perhaps less ambitious in what it thought it could achieve than was the Greek government. And I think that was wise on the part of the Irish government. It's better to start off with modest targets and achieve them than to set very ambitious targets and then disappoint your creditors when you don't achieve them.
It also depends on whether you think the government set the targets or the creditors.
Well, indeed. I think it's very important that if people are supporting a country, that they don't insist on it setting unrealistic targets, for example, for privatisation receipts. It's unwise to set unrealistic targets because that ultimately damages confidence, and money itself, credit, is based on confidence, and the challenge we face today is that of restoring credit and confidence and trust in the global economy, and making false estimations is a bad way to go as far as that is concerned.
How do you see Greece's situation right now?
I think there are already some good signs in Greece. First of all, you have seen some recovery in exports, 25% increase in exports in recent times. You've seen an improvement in unit labour costs in Greece. Unfortunately, inflation has not come down adequately. You don't have an adequate export sector. And in a sense, if a country has borrowed from abroad, the only way it can recover from that situation is by selling abroad. And Greece's export capacity is not as good as it should be, and to some extent some government activity like not paying value-added tax returns to exporters on time is inhibiting people from exporting from Greece, and it will be Greek exporters who will be the saviours ultimately of Greece.
What could Greece learn from the Irish experience, if anything? Maybe you think that they're so different that we cannot really learn much.
They're not that different. We have many common features in our history. We both have had desires to reunite our people. Greece has had the great idea since the 19th century of reuniting all Greeks. Ireland has had the ambition to unite Ireland as one state, and in a way that those two ideals have absorbed all of our imagination, when we should perhaps have been paying more attention to improving our domestic economic situation. And Ireland has learned that lesson and has now moved to try to resolve its problems economically as the first priority. It's not easy. It's going to take quite a long time, but what we've got to recognise is that we are in a completely different world to the world of 1990. In 1990, China had not yet opened up. Eastern Europe had not yet opened up. We were not having to compete with 3 billion people. We only had to compete with 1 billion people in North America, Western Europe and Japan. That has meant that you can't realistically, in the long run, expect an unskilled worker to be paid twice or 3 times in Greece what an unskilled worker is paid in Poland, or an unskilled worker in Ireland to be paid twice or three times what an unskilled worker is paid somewhere else in the European Union. And that adjustment can be done by either reducing wages, which is not desirable, or by increasing skill and education, which is the way forward. And I think what both Greece and Ireland need to do is look very critically at our educational system and ask ourselves, not just is it doing a good job for the people at the top of the ability spectrum, the people who will go on to get PhDs, but what is it doing for the people who are currently leaving school without any qualification? Those are the people who become long-term unemployed, unskilled workers. Education is where these people can be rescued from that situation. And we've got to design our educational systems to cater not just for those with high ability, but for those with medium and perhaps even low ability. These people deserve an education too, suitable to what they can do in the world, so that we can compete with the rest of the world.
You were Prime Minister of Ireland in the mid-1990s when the good times started, growth was very high and Ireland became known as a Celtic tiger. Do you think that if things were done differently in the good times, maybe the crisis could have been avoided?
Yes. It's fair to say that in Ireland we experienced a period of very rapid economic growth from 1994 up to about 2001 or 2002, which was based on very solid fundamentals. We were very competitive, we had a lot of foreign direct investment, we had the results of a large investment in education during the 1960s and 1970s, which came through into high production in the 1990s. Then, around 2002, we went completely astray, because having joined the euro, cheap money was available to us, people were lending foolishly to countries like Ireland and Greece, lending foolishly to banks like the Irish banks. And in the Irish case, the Irish banks got all this cheap money and lent it very foolishly on to Irish clients, and that has created the big banking problem. In Ireland, in a sense, it is the problems of the banking sector that have undermined government finances. In Greece, it is the problem of the government sector that has undermined the banking system in Greece. But they both have a common root, and the common root is foolish lending at unsustainably low interest rates by people in other countries who have not yet accepted the responsibility for their mistakes. We in Ireland and in Greece are having to accept responsibility for our mistakes, but some of those in other countries who allowed this foolish lending to take place are putting all the blame on the borrower, and that's not fair.
As Irish Prime Minister, you presided over Ireland's tenure of the rotating EU presidency in 1996, when the terms of the Growth and Stability Pact were finalised. These rules did not succeed in averting the crisis. With the benefit of hindsight, what was right and what was wrong with these rules?
The rules themselves were right. The idea of having no more than 60% of debt to GDP ratio and no more than a deficit of 3% of GDP in any year, those were the right rules. What was missing was an adequate method of enforcement. And ironically, the first people to break the rules were the Germans and the French. And when they broke the rules, they insisted that there be no penalties imposed. And that, of course, completely destroyed the credibility of the rules, because rules without penalties are not rules at all. Where we failed was in adequately devising and making sufficiently automatic the penalties. But of course, one has also to bear in mind that the markets ignored the reality as well. Markets should have been disciplining countries from the beginning by charging slightly higher interest rates to countries who had less good financial situations. But the markets didn't make this distinction. And these participants in the markets are now blaming the borrowers and not taking their own responsibility for the fact that they lent without discrimination.
Ireland and Iceland both faced acute banking crisis. Iceland chose to let its banks collapse and start from scratch. Ireland chose to receive a bailout, to be part of a bailout program. Which country made the right choice, the best choice?
Well, I think it wasn't open to Ireland to do what Iceland did. If Ireland had done what Iceland did, given that the Irish economy, although small, is an awful lot bigger than Iceland, the knock-on effects to banks in the rest of Europe of Ireland simply allowing its banks to collapse, allowing the savings of its people to be wiped out, which is what would have happened, would, I think, have been much more severe on a global scale. And we, unlike the Icelanders, were and are members of the European Union, so we had a responsibility to the rest of Europe not to allow events to occur in Ireland that would bring the whole credit system in Europe down into collapse. We exercised our responsibilities at that time, and I think it's important that others now recognise that in doing what we did in rescuing our banks and then subsequently having to get a bailout 2 years later as a result, we were doing something that benefited not just ourselves and our own savers, but which benefited savers in banks in Germany, in France, in Austria, in the Netherlands, in the United States, in the United Kingdom, all of whose banks could have collapsed if there had been a collapse in the Irish banks. Remember, in 1931, when Creditanstalt collapsed in Austria, that led to a contagious effect throughout Europe, and 2 years later, the Nazis were in power.
So even if you had the choice and you were a country like Iceland, you think that the best choice would be still to not let your banks collapse?
I'm afraid that it has to be the choice, because at the end of the day, you've got to protect people who have put their money on deposit in the bank. Those who take a risk and who invest in shares and become owners of the bank, well, they must take the consequences of the risk that they have taken in hope of a greater reward. But those who have decided that they're not going to take risks, who are simply going to put their money into the bank into banks on deposit so that the banking system can function and lend to other people, those people have to be protected. Otherwise, there's no confidence in banking, no confidence in credit, and ultimately no confidence in money. What is money? Money is just a piece of paper. Money is a promise. That's all money is, it's a promise. And if promises are broken, there's no basis for money. And if there's no basis for money, there's no basis for economic activity.
Thank you very much, Mr. Brútton.